Hello and welcome to our channel. Today, we're taking an honest look at Benitec Biopharma stock, ticker symbol $BNTC. I'll be discussing the advantages and disadvantages of this stock, and giving it a final rating out of 10. Before we begin, I must remind you that this video is not financial advice, and it's always a good idea to do your own research or consult a financial advisor before making any investment decisions. Starting with the advantages, Benitec Biopharma is a clinical-stage biotechnology company focused on developing novel genetic medicines. They're working on DNA-directed RNA interference-based therapeutics for chronic and life-threatening human conditions, such as oculopharyngeal muscular dystrophy, OPMD. Benitec scored higher than 40% of companies evaluated by MarketBeat and ranked 633rd out of 940 stocks in the medical sector. The company has received a consensus rating of buy, with 7 buy ratings and no hold or sell ratings. Furthermore, Benitec is part of the medical, biomedical and genetics industry, which currently has a Zacks industry rank of 63 out of more than 250 industries. This suggests that the industry is well positioned, and a rising tide could lift all boats in this segment. Additionally, Benitec has seen solid earnings estimate revision activity over the past month, with current quarter estimates improving from a loss of $1.25 per share to a loss of $1 per share, and current year estimates improving from a loss of $4.33 per share to a loss of $3.58 per share. Now, let's talk about the disadvantages. First, Benitec Biopharma is a clinical stage company, which means they're still in the early stages of development and have not yet generated any significant revenue. This also means that there's a higher risk associated with investing in the stock. Additionally, the company's earnings are expected to decrease in the coming year, from $1.48 to $2.31 per share. Another concern is the company's P/E ratio, which is currently -9.72. Since Benitec's earnings are negative, its P/E ratio cannot be compared to companies with positive earnings. Furthermore, the company has a P/B ratio of 4.53, which may indicate that it's overvalued with respect to its assets and liabilities. It's also worth noting that Benitec does not currently pay a dividend and has not demonstrated a long track record of dividend growth. In conclusion, while Benitec Biopharma has some promising developments and is part of a strong industry, the company's early stage, negative earnings, and lack of dividends are significant concerns. Taking all of this into account, I would give Benitec Biopharma a rating of 5 out of 10. This is not a